As far as the S&P, okay, so it's pushing up, sideways, pushing up. It just continues to do that. So while I do think we're overbought, and I say this time and time again, when stocks push up like this, they pull over or they pull back. And so far, that's all the S&P has done. So to continue shorting this as it pushes up, it's kind of silly. It is like literally assuming the car you just took off the lot, brand new with 2 miles on there, it's like assuming that car is going to crash or break down. So I get it. It is overbought. I've even taken some put trades if you're in my group the past couple weeks. What I do think is we got a little high, got a little ambitious, but last week was a holiday week, not really a lot of bank participation, and a lot of times, man, they come back on Monday and say, hey, that's adorable, the markets belong here, and they drop it down. So anybody that swung that over the weekend, you're kind of on that ride. We'll see some. Typically Mondays after that, we get the shakeup or the put everything back where it goes, and then we continue on with the trading. But as far as news goes, tomorrow we have Powell speaking. Tuesday we have Powell speaking. Sorry, Tuesday. Oh, we have nothing tomorrow. Monday's your only day, so buckle up. Get ready. Get your pieces on the board. Tuesday, Powell speaking. Wednesday, Powell speaking. Thursday, we have CPI. Friday, PPI. Now, if you've been following me for a while, these are just excuses for the market to move. That's kind of all it is. I'll stick to the charts. I don't care or wonder what he's going to say in all of these. I care more about the reaction. I'll let all the other YouTubers come out with all the reasons why it's bullish or bearish, or what color tie he was wearing, or did he sneeze to the left or to the right. Someone will decode that. I care more about where the money's going. So that's just kind of where I'll make my opinion. But for now, I do think I actually expect us to pull back this week. I do have the expected moves put up there, so if you guys do have my charts, these are already up to date. Everything's good. I can bring it up really quick. If you're in my group, this is how you know I'm at my desk on the weekend. When I post these, not 5 minutes before the stream. All right, IWM 374, QQQ 837, SPY 659. Tesla 1719. Actually, quite a few of these tech tickers have quite a bit more of the expected move. Meta 1971, Microsoft 912, Nvidia 633, Amazon 575, Apple 583, Google 464, Ford 39 cents, Palantir 142, Intel 119, and finally AMD 863. If you guys, I think my head's blocking. There we go. If you're curious why Ford is in there and I have all these other tech tickers, Ford is just an amazing stock for a lot of people to learn on. As far as barrier to entry, the stocks are liquid, so if you're looking to start the wheel, sell options, it's just not. It's hard to actually mess that up. So it's something I had for like a decade. I literally just recently got rid of it because I'm just all in on AI. But anyway, Meta did go nuts on Friday. Tesla as well. Just really driving things up, and the options market is certainly pricing this in. And for those of you guys that may be new on TikTok or just new to watching this again is where market makers are pricing things in. So when I say Tesla has a $17.09 move, that's up or down. Could be sideways, could go up 17, could go up 17, then all the way back down 17. It's just kind of that range of where they have everything accounted for. So when GameStop blew up, when you get those short squeezes, what really makes those violent is when we get outside these moves, and market makers need to step in. Again, I've said this 1,000 times. I do have a playlist coming out of just popular questions. There's already a couple videos in there. This will be one of the next ones. But for now, right now, it's you and the market movers, institutions, banks. They're not out to get you. They're just out to make money. Sorry, you're not important. They don't care if you're alive. They just want money. That's all. Now, when all of a sudden we step out of the sandbox, now it's in the market, you, the market movers, and the market makers. And things can get violent. So a lot of times we'll rein it back in and get it under that 17 mark. If we're talking about Tesla. Or sometimes we go for that 2 spot. Which and then would, I guess, jump that up to $34. So, anyway, jump back into the NASDAQ. Again, a little bit up. Man, it would be sweet if we could just pull this thing back. Or a 5 spot. Yeah, Tesla is the one that Tesla used to be like a normal 3 or 4. Then GameStop came out, and that really did grab them by the balls when it went, 20 standard deviations? You had like better luck at getting struck by lightning twice. in the same day, but in 2 different states. You know, it was something astronomical. It was ridiculous. Blue right now, speed bump zones. We're kind of just watching the price action here. Typically, that's the hourly chart that I would see that in. Yellow, 4-hour daily zones. So right now, because we're at all-time highs, this is just kind of what we do when we're in a bullish market and it's all-time highs every other day. You can guess, you can talk to the Fibonacci people, you can ask Elliott Wave and all of his cousins and friends. Someone will probably guess and throw darts as to where they think the top will be. We really don't know until the sellers do show up. So until the price action shows it and maybe supports it and shows it off at a couple of times, we're kind of just marking things as we go. I've gone over this in a few videos. You know, I trade from my phone. So when I'm at the desk, when I have just the real estate of all my monitors, I charted out, these are my notes. So I just kind of know we're heading to all-time highs. Pulling back to here would be, I think, a pretty good dip buy. Pulling all the way back down to this level. This would be a... Ooh, let's modify this, actually. We're going to grab that. So this right here would be a much better dip buy. That I'm confidently buying. This, you know, like, so if I'm buying the NASDAQ contracts, I'm probably buying 1 right here. This I'm probably buying 2 or 3. Now, for anybody watching on TikTok or on YouTube, I don't do the fake accounts. I have real money. So, no, I'm not doing 20 contracts, and I don't have the fake one that copies it to 20 more other accounts. That's cool, but I trade with my own money, and you don't need 20 contracts. Well, I guess you could. That's a lot of risk. But anyway, I had somebody say that, like, you're only trading 1 or 2 contracts. Yes, and I only make a few $1,000s. But if that's maybe not your speed, hey, amp that thing up. Let me know how it works out. I can't wait to hear about it. I think you should send it with real money first. And then when you don't figure it out, maybe try a paper account. Get back to those leave that keyboard alone situation. Let's see. So the Q is pulling back to that yellow zone. Would probably put it below the expected move. This is probably more the blue zone right here. So what I would, again, just to map that out, if we get outside this expected move, again, so we got the Qs right here, 837, so that's this range right here. We get outside this, I'm thinking we hit that zone, and then they rein it back in. Market makers get back to work. The algos turn on. We rein that thing right back in. So I bought the dip, reined it back in, stop in the green, and it sets you up pretty nicely for a decent trade because if it continues up, you just make more money. Armin says, thoughts on QQQ? Those are my thoughts. Did I answer everything? Lisa says, I don't see any yellow zone. It's probably because you weren't paying attention to the last 5 minutes. Here's the yellow zone that I was talking about. This is the NASDAQ futures. Now, this is the contracts for difference. So if you're not paying for data, you'll still see the candle motion, and that's what I worry more about because these candles show you the price action. They show you where the buyers are, where the sellers are. That's all I care about. This comes first, then I'll worry about the price later. But this drives the order flow. The QQQ and SPY, all those are just ETFs. So pulling it back down to here. I don't zone these out because that's silly. I know people do, and then they like to talk about zones and stuff on SPY, but again, it's an ETF. It's like reading the Harry Potter books, but only reading the odd or even pages. Sure, you'll know the story. Probably quite a few details are going to get left out. I like to know all the details. I like to know everything. I tried to pay my electric bill with a paper account money. It was a no-go. That's unfortunate. Yeah, every year I try to call and get a Black Friday special on my bills. They laugh at that. I sometimes tell them I haven't sold my stock yet, but don't worry, it's going to go up eventually. Can I pay you then? They always hang up on me. I don't like it. Not a fan. Now, the Russell for now looks like a buy. Now, like we talked about in the last video with NVIDIA, it's horizontal until not. So the buyers have shown up at this yellow zone so far 1, 2, 3, 4, hopefully 5 separate times. We're hoping that continues. If we even get down here to the bottom of this zone, I would start to be nervous. So right now, it's not worth me buying right now. I'm not too amped about this. If we were doing the stream tomorrow morning, right? So I live in the real people time. It's Central Standard Time. You know, if it's 8:30 in the morning, markets just open up, I would go long. I would go long with a couple contracts, probably put my stop below this green wick. That'd be it. If we were down here at the type 2, this is the bottom of that zone. I would go ahead and take that. But I need volume in. I need people here. I need everybody trading. Right now, trying to grab this overnight. I might just put my stop down here, and it might just take longer to tag out. So structure-wise, timing, just not the best on this one. I think the price level, decent spot. But again, it's the timing of it being Sunday. Otherwise, still does look like a buy for now. That's getting to the bottom of that zone is gonna put it right there at the type 2. Which for anybody on the TikTok, let me map that out for you guys so it's simple. All the videos should be on Don Fran Show or Don Fran Trading on YouTube. But as the stock comes in and it bounces, because well, I'm better at this than you are. I'm just kidding, guys. I'm 2 monsters in for the day, so we're doing good. This right here is what I would call buying at a type 1. This right here would be the type 2. And then a type 3 is you're buying it on the way out. This is where people think it's safe because it's already bounced. Typically, your fills are a little bit higher because it's leaving the zone. So your type 3 is typically a little bit higher. I don't personally, you'll never see me talk about these a lot because a lot of times in the beginning, I would do that. Here's that. I would buy here. Or maybe I'd wait till it's safe and I'd buy here because I was scared. And then it would just do that. You know, and then like I'm already just screwed because the second I buy, it's instant red. Instant red, just like the instant red over here. But here I bought it knowing it's going to go red, and I'm going to add on right here. This is like, I'm going to buy it. We're clean. We're safe. We're doing good. I'm feeling good. I know these markets, and then it's instantly red, and it just pisses me off. And when I lose a trade like that, and anybody does, it has the potential to ruin the next 5 trades, and I'm not for that. So before I ever click the buy button, I know how many I'm going to buy here. I know if I will or will not add on right here. Now, if I were to take the type 1 and type 2, my average is probably right here, but more than likely right here. Because I might buy 10 shares at the type 1 and 90 shares down here at the type 2. If you guys understand risk management and how I do it, that should make sense as to why. But by the time it pops up, my stop is in the green. My risk is off the table. I'm already making money just right here. So if it does that and pulls back and rejects, well, it's a green trade. The only thing I get to do again is say, should I take that trade again at the next type 2? Is it horizontal or are we fading? Are we coming back down? So if you guys do hear me talk about it, that is your quick lesson as far as that goes.